Hey all, welcome to ShareTreck. This is Raj here, and today we're going to start off right with the CNBC homepage as we always do. As you can see, all the indicators, futures are looking a little red. They could always turn green. Today we have the triple witching event, and that's what is going to determine how we proceed further ahead. SPX is in a very interesting point. I will show you later on when we go into the TradingView platform. And it will take a lot not to break out of the upside, but that depends on Mag 7. We will talk about that later today in this session. However, if SPX broke below the current resistances that it is, if it got pushed down by the resistance, it will be difficult for it to get up. And historically, the March triple witching, which occurs on the third Friday of March, which is today, that's when the stock index futures, options and stock options expire simultaneously. So it has always shown a tendency to experience short-term volatility followed by a potential rebound. So in that context, if you look at SPX, I think it's looking very tempting that it may bounce back up again. However, the direction is not guaranteed and depends on broader market conditions and especially on Mag 7, which accounts to almost 30% of the weightage of S&P 500. So in terms of historical trends after March triple witching, basically there is short-term weakness or volatility in the week following triple witching, and the market often sees a pullback or choppy trade due to unwinding of large option positions and rebalancing by institutional investors. This is sometimes referred to as the witching hangover. And end of March strength is also a kind of a seasonality effect because the last 2 weeks of March have historically shown strong tendency to rebound as fund managers position for quarter end window dressing. And we have seen a little bit of resurgence in the third week, and now we are going to get into the fourth week. Probably this could be the time when things take off. And April has been one of the best performing months for S&P 500 and NASDAQ, supported by earnings season optimism and new capital inflows, typically pushes up April. However, we have to remember that this April 2nd is going to see reciprocal tariffs and tariffs come into play, which has not been there in the past. So how is that going to distort April? That is still unknown. And that's why when you look at the TradingView platform, as I'm going to show you all the charts, you will see most of them are going horizontal or consolidating. And basically the market is in a wait and watch mode to see what is going to happen. Therefore, I am thinking that this March, the second half is going to be subdued. It's not going to be a V-shaped jump from the middle of March to the end of March upwards, but rather it's going to be a sideways movement until 2nd of April, after which probably we'll know which directions we are going. And in terms of previous triple witching, I think in 2023 S&P and QQQ saw volatility after March triple witching, but rebounded sharply into April. In 2022, a weak post-witching period due to Fed's rate hikes was short-lived, and then there was a bounce at the end of March. And in 2021, there was a strong recovery post triple witching, especially in tech stocks. So overall, I think this year I am a bit circumspect because of the April 2 tariffs. And if Trump turned around and said that there is no more tariffs, then that changes the ballgame altogether. So for 2024, the factors to watch is Fed policy and rate cut expectations, earnings season in April, how it turns out, because companies have already downgraded the expectations earlier when they did the previous quarter earnings release. And now we have to see if the reduced expectations can still be met post tariffs. And that's going to be a critical test out there in April. And AI and tech stock momentum is again something that we have to look for. If the momentum remains strong, it can pull up S&P 500. And also we have geopolitical risks. That's what is happening with Russia, Ukraine, and in the Middle East. And also we have some disturbance happening in Turkey. So all of those things are kind of bubbling up. And of course, we have China and Taiwan, which is always simmering in the background. And our rocket man, North Korea, has not done anything yet in the new Trump term. So expect some rockets and other things happening out there. So all of those usual suspects are yet to react. So we'll keep that in the back burner for now. In conclusion, I'll say that while history suggests a potential short-term pullback followed by a late March rebound into April, external factors and all those things can impact this time around. So now I'm going to talk a little bit about our stocks. But before that, I want to have a look at the treasury yields, because the treasury yields are inching lower amid ongoing uncertainty over the US economic outlook. And this is the wrong reason for yields to go down. And therefore, I think that the economic headwinds seem to be a bit harsher at this point of time. And if you look at the stock market heat map, yesterday was all red, but if you look at a week ago, everything was pretty green. So basically we are moving sideways, down a few days, up a few days, and in overall measure, I think we have done better over the month as compared to where we are today. And I want to go into the futures, because if you look at NASDAQ futures, you'd see that we are still above this area of support, which is propping us up, and we are still below this area of resistance of 2038.50. And we have been moving in this zone for quite a while without being able to take a decision on where we are going. And our MACD is bullish, but momentum has been pretty flat. I suspect this is going to be the status for us until April 2nd. Now, if you look at S&P 500, this is what I was talking about. There is this diagonal line of resistance, and we have got to break through above that, and then break above the 200-day exponential, and also break above 5,738, which is a horizontal resistance, in order to make any further headways. And we are, in the last 4 days, we have been within these two ranges, and today I think we'll be able to break through this diagonal line of resistance because of the elapsing of time, not because of the increasing of the price. This is a given. Now, if you look at a dollar cost index situation, we have a double bottom out here, which has got the power to push us all the way to the 9-day exponential, which is sitting at 104.662. After that, all bets are off. We'll have to see what happens out there. And we are still below the diagonal line of resistance out here for the 10-year yields. And as the yields start coming down, it makes the bonds less attractive, and therefore money is likely to go into stocks. But if the stock environment becomes much more difficult and risky, then we would probably see money go into gold and silver. So those are the two other places where we could look at. And also, I think Japan has got some inflation concerns coming up. So if Trump succeeds to bully Fed to reduce the rates, and Japan, due to inflation, decides to increase the rates, then we have a yen unwind trade rearing its head up. So we have to keep an eye on that area. So that's what I think. And if you go to indicators here, it is even more clearer for S&P 500 that we have this line of resistance at 5,659, which we want to break through, and we broke through it yesterday. So I'm going to mark this as a line of support. And then we have this diagonal line of resistance and the 200-day exponential, both of which are keeping it pushed down. And as I was mentioning, we are in a wait and watch mode, because in the last 4 days, we have been in a range-bound trading. And I'm thinking that April 2 will probably see us automatically break above this diagonal line of resistance, just due to sheer elapsing of time. And if we have a continued support from 5,659.34, as we are seeing here in the last 2 days. In that case, I think we are definitely looking for a rebound of after April 2nd, and probably a week of time for the tariffs to settle in, and then we should be on our way up again, because we have been as low as we can be so far. However, on the other hand, if this turns out to be a bear flag, then what will happen is that the drop that we have out here, this entire length will be the length of the drop that we will have down from the point where the bear flag breaks down. So it's going to be a steep fall from there. So we are in a very tricky situation. And if you look at NASDAQ, again, we have this line of support at 19,700, which existed as a line of support and was created as a line of support yesterday. And day before yesterday, it was a line of resistance. So we are now converting that back into the resistance from our movement, from our price movement yesterday. So it's become a red line of resistance again. And today that becomes a challenge for us to break through. And again, if you look at the price action, we are range bound and we are kind of consolidating sideways. Maybe that will continue to happen until April. If you can see, this point out here is the 1st of April, which is the intersection of this diagonal line of resistance and the horizontal line of resistance. So I think we are destined to move zigzag until we come here, and then the sheer elapsing of time is going to get us out of this diagonal line of resistance. But whether we are able to break out above the horizontal line of resistance will depend on MAC 7 and the overall response to the tariffs. Then we have VIX, which is continuing to steadily move up. It is the second green candle today. It's at and it's above this diagonal line of resistance that we had before. So it has broken out of the diagonal line of resistance, and we have to start creating higher highs for the volatility to go up. But a higher volatility compared to yesterday means stocks are going to go down today compared to yesterday. And Dow Jones is also being held down by the 200-day exponential moving average. If you look at IWM has also been kind of consolidating, moving sideways, being constrained by the 9-day exponential moving average. And it's doing much better than the other indices, I must say. And put call ratio is bullish to neutral. I would say it's mildly bullish at 0.884. And I'm going to look at gold, which has been dropping a little bit. It's giving up a little bit of gains, and that is but expected because it has gone all the way up to 3,000, and staying in those kind of round numbers for the first time is always a challenge, and there is going to be a little bit of profit taking here and there. And also you'll see that the good stocks in NASDAQ and S&P 500 are at a great deal of discount. So where do people take their money from? They will take money from gold because they have got a lot of gains out there, especially people who have had gold for a long time could sell some of their gold and put the money into stocks. So that kind of a dynamic might be happening in the background. And also people who had bonds, now that the yields are going down, the face value is higher. I mean, the market price of those bonds are higher. So a little bit of profit taking could happen from there. And the money could be moving between bond, gold, and the stocks, especially the blue chips, which are beaten down. So that's the area I would look at. And now let us go on and start having a quick look at AI. And I have NVIDIA out here. And NVIDIA seems to be pushed down by the 9-day and the 20-day and the 200-day exponential moving average. And we are again facing the same resistance today. If we somehow manage to break out from there, I'm thinking that good things are likely to happen for NVIDIA because MACD is already bullish and momentum is almost ready to become above average. So the moment momentum is above average and MACD is bullish, I'm really hopeful that NVIDIA will be able to break out. And if NVIDIA breaks out, it will bring out S&P 500 as well. And if you look at Meta, we got a bullish candle out here for Meta. And I'm thinking that this particular candle is going to help Meta to do some kind of a trend change out here because Meta has been a very strong stock and it has dropped significantly, and it's very close to the upper limit of this bearish channel. And MACD is on the mend, momentum is also picking up, and I would hope that this time when it hits this diagonal line of resistance, it gets a little bit of extra juice to jump out and break out of this bear channel. And if it does that, then again it's going to do a solid for S&P 500. Then you look at Google out here. I'm going to remove this short and I'm going to put it out here so to indicate exactly where we are looking at for this shorts. Make it a smaller one, and yeah, just a little bit of housekeeping. We are still very far away from this diagonal line of resistance on the bear channel. So I think Google with low PEs can definitely go up, but it's being constrained by this diagonal line of resistance which has been coming with us for a long time, and that's again kept it pushed down yesterday, and it's also going to play the resistance today. And if we break out above that, then I think that Google could also contribute to a little bit of upward movement for MAC 7. Today pre-market it's down 0.44, so that's what I'm seeing out here. And then let us look at Amazon. Amazon has broken out of the bear channel thanks to the consolidation and the elapsing of time and the sheer steepness of the bear channel. But we are not yet out of the woods. We are being pushed down by this horizontal line of support at 195.64. That's what we want to break out today. When I look at the MACD, it looks promising, but the momentum is not yet there. So momentum needs to pick up. And if we break out of this diagonal line of resistance, we have the 200-day and the 9-day exponential to contend with, and I'm thinking that if we break out of this resistance, it will again contribute to pushing S&P 500 up. And the reason I keep on mentioning S&P 500 is to give you an idea of how difficult it is going to be for S&P 500 to break out above by looking at individual resistances that Mag 7 is facing. And we look at Apple. Apple has been able to keep itself up above this diagonal line of resistance for the last 2 days. Will it be able to do so today? It's already down 0.89% and it's way below this diagonal line of support. So I'm going to mark this diagonal line of support into a resistance, and that's where it is pre-market. It's in resistance. You see this orange line out here. That's where Apple is. So it's going to be a challenge for Apple to break through above this diagonal line of resistance. If it did, then it can help S&P 500 to move on its way up. So that's again another level of difficulty for S&P 500. Then you look at Microsoft. Microsoft has been consolidating for quite a while, and due to sheer elapsing of time and the slope of this bear channel, it has broken out of the bear channel. But can it continue to move upwards and break above 386.90? That is the question for today. It's at 385.71. So with a little efforts, it can break out above that, but it still needs to break out above the 209-day exponential moving average, which is sitting at 392.80. And I think for today, if Microsoft manages to break above 386.90, it can then start contributing towards helping S&P 500 to break through its resistances. And the biggest weak star for S&P 500 is Tesla. Again, due to sheer elapsing of time, Tesla has managed to break out above this bear channel, and we have converted a resistance line of the bear channel into support. But we are still way under the resistance of 241.74. But Tesla has the potential of helping S&P 500 today because it's got a lot of room before it encounters the resistance at 241.74. Pre-market, it's already up 0.66. So maybe today Tesla might contribute to help S&P 500. And then you look at Oracle. Oracle is still below this diagonal line of resistance of the bear channel, and potentially this bear flag could break down, and then we could see a huge fall, and the fall could be the length of exactly around here. I think this is what the length I'm looking at. This is the entry into the bear flag. So if I copy this and or maybe even if I move this around and put it out here, assuming that we are breaking down from the bear flag here, that would take us to somewhere close to 125.89 for Oracle. But I'm not going to put that out here yet because it's premature to calculate, because we have not yet broken out of the bear flag, but I'm expecting that it could break out of it if it doesn't manage to break out of the bear channel out here. Now we are going to AMD, which is down 0.56 in pre-market trades, but it's already broken out of this diagonal line of resistance, which now becomes a diagonal line of support. And I think AMD has demonstrated a whole lot of higher lows. But now that we have broken out of this diagonal, I want to see a few more candles which indicate to us that we are still moving on the upward direction. If that happens, I think AMD is something that one could get into, because MACD is also bullish, momentum is also above average, and we are looking at all those factors out there. And let's go on to Intel. Intel is going to fill this gap. That is my expectation. And we have SMCI, which is up 1.81%, but there are some negative analyst reports for SMCI. I don't remember whom, but there's a few negative analyst reports which could also have a toll on SMCI, and it's still below this diagonal line of resistance. So it has to break through above this and break above the 9-day exponential exponential before it can do anything good for the indices. Qualcomm is also down 0.44. It is still within this diagonal line of resistance of a bear channel. Broadcom, again, due to sheer elapsing of time, has broken out of this diagonal line of resistance and converted that into a support. It doesn't mean much for Broadcom. Broadcom still needs to break out above the horizontal line of resistance at 198.64 and also the 9-day exponential, which is sitting at the same level as the horizontal line of resistance. So it's a very strong resistance. And also we have the 200-day exponential performing the role of a support. So there's a wide range in which Broadcom can move, and Broadcom, I think, has also been downgraded by an analyst because of NVIDIA's call at GTC. So I think Broadcom is likely to face a little bit of rough patch before it improves. Palantir is down 0.51% after going up 1.50% yesterday. It's being pushed down by the 9-day exponential. And if it breaks through above that, I think there's a lot of room for Palantir to still go up. MACD is bullish, momentum is just at average. And I think today, pre-market, Palantir is a bit negative at minus 0.41%. But if that changes, then I think Broadcom has got a great potential. Now, let us look at what do we have here? Let's look at Rigetti. And if I look at Rigetti, it's still down 4.67%, not doing great at all. And it has converted the resistance at 9.86 into support at 9.86 into a resistance. And also we have the 9-day exponential, which is pushing it down. So Rigetti is looking very weak, and it still has got support in this diagonal line of resistance and the diagonal line of support. And then we have SMR, which is down 0.44%. And it still has the 9-day exponential supporting it, sitting at 17.90. Pre-market, we are down 0.44%, sitting at 18.12. I'm still hopeful for SMR. And with that, let's go and have a look at JD.com. I was glad that I sold JD when I did, with a little bit of profits. It has come down to the line of support. I'm going to be watching it very carefully. If it bounces off the line of support, I'm definitely buying a little bit of JD to ride it on the way back up. Maybe even if I get 50 cents positive, I would sell it off. But I think there's a little money to be made on JD.com. That's my personal opinion, of course. Please do your own due diligence before you invest. And let's go ahead and look at genomics. And if I look at Verve out here, it is bouncing off this line of support, and it has to stay above this line of support to be viable. And again, even if it stays on top of this line of support, it's on a bear channel, it's going to continue going down until there are some catalysts for it. Ginkgo Bioworks is flat in pre-market trade. This minor line of resistance seems to be performing its role. It's taking its job very seriously and performing it very well. Then we have Caribou Biosciences, which is again bouncing off this diagonal line of support of a bear channel that we have out here. I've just extended it to give it some support. And then we have CRISPR Therapeutics, which with this inverted red hammer. The inverted red hammer candle with a very small head that you see out here generally signals bullish potential despite it being red. And that's basically because it is characterized by a small body near the bottom of the candle with a long upper shadow. And if we interpret that, it suggests that the price moved strongly higher during the period yesterday, but closed very near the opening price, indicating that the bulls initially controlled the market but could not maintain that control by close. And they would potentially be able to reinitiate their efforts again today. And the small head or body shows that the price didn't move much from the open to close, but the significant upper shadow shows the potential for a reversal with the bulls pushing price up during the session. So I think that we have some opportunity out here. When seen after a downtrend, the inverted hammer can be indicating that the selling pressure might be weakening and a reversal to the upside could be possible. So that's what I am hoping for CRISPR today. And I think if we look at Grail, let us just adjust this chart out here. Sometimes we have this kind of a calibration problem with TradingView platform. So I'm going to do a little bit of adjustment out here. I'm seeing this inverted green candle out here. And for Grail, I would suggest that this is a bullish candle. This could also indicate a trend reversal. And we are going to look at this diagonal line of resistance here today. For us, today, this is going to mean a higher limit of 29.47, where the resistance will kick in for Grail. And the bottom is very low, so Grail could be very volatile today. That's my expectations. And if I'm looking at Prime, I can see that we have this diagonal line of resistance which has reappeared. And that's what we need to break up today, because pre-market we are already down 3.48%. So we need to go above that. And I'm looking at the next item out here, which is Beam. And as far as Beam is considered, I think we have formed a bullish harami candlestick. As per Japanese candlestick theory, it's a bullish pattern. So if that happens to be a bullish pattern, and if we manage to bounce up, then we are going to be improving the MACD a little bit, and we are going to be improving the momentum a little bit, and we are going to be aiming at 25.10, which performs the role of a resistance out here. Altimmune is still within the previous day's range, so nothing much to report out here. Bluebird Bio is also moving sideways, waiting to be dead, and Allogene is flat in the pre-market trades, and we have mRNA, which is up 0.03% in pre-market trades, but it's still looking very weak on the charts. We have ARCG, which is also still being held back by 22.94, and we need to break through that this morning. Already pre-market we are down 0.52%. We are at 22.74. PSAB is flat in pre-market trades. It's still riding the support of 1.21 for quite a while. It's just consolidating sideways, building a base to move upwards. Intelia is down below the support line that we have out here at 8.97. So that's something that we have converted into a resistance, and I'm going to mark that as a resistance. And we are above this diagonal line of support that we see out here, which has been with us for a long period of time. Even though it's a support, we should be cognizant of the fact that if we ride along this, we are going to be on a bear channel. We're going to continuously lose value. It's not a very good proposition for Intelia. If you look at Illumina, again, consolidation out here, patiently waiting for the China blacklist to go away, patiently waiting for this tariff battles to be over. So it's a long run for Illumina, gives a lot of opportunity for patient investors to wait and watch and accumulate positions slowly and steadily, and book profits elsewhere and start accumulating positions in Illumina, waiting for it to break up on the upside, because this company has got proven technology, scalable platform, and a global footprint. What's there not to like about it? And the Grail overhang is gone. IMTX is down 1.30% from yesterday's action, and it potentially, I mean, if I want to stretch my imagination, I would say it's an inverted head and shoulder, which will be a bullish pattern. I can see a lot of support here from the MACD, which is bullish, and also the momentum, which is above average. The main problem here is that the momentum is falling. The interest is falling in IMTX, and that's the reason why it's going on like that. There is no trade in pre-market. That also indicates a lack of interest. Once interest comes back in, it could probably ride up. Editas is up 2.19% in pre-market trades, and it has managed to break out above the day before candle. So that's a positive for us. And this red candle out here will loosely form a bullish harami, but it's not exactly one. But I'm going to use that to just look for some kind of a bullishness. And I think today, if we end up above day before yesterday's candle, I would say that that will be a little bit of progress for Editas. Iowa is still riding the way down on the escalator, and Unicure is still in the bear channel. and it's continuing to ride down the bear channel. Vertex is still consolidating. I'm still happy with Vertex because it's on the bull channel. It's a profit-making company, nothing to be too much worried about as yet out there. And after that, I want to go and have a look at our currencies. So let us go to currencies and let us look at Bitcoin. Again, Bitcoin is still going to battle a very strong resistance of 200-day and the 9-day exponential, both of which are sitting around 85,500 mark. So if we are able to somehow break out above that, then I would say that Bitcoin is back into business. And again, as I said, Bitcoin is linked to the stock market at this point of time. So if the stock market goes down, so does Bitcoin. And if it does go down, I think 80,514 is the support I see for Bitcoin. And if I want to do a minor line of support, I would just draw a line of support out here. And I would say that this is a minor line of support somewhere in the region of 82,588, because in the past for 4 days we had been able to maintain that level. So I would say there is some kind of a little bit of support out there, some muscle memory which can push us up above. So for today, I think our first line of support is 82,631, second line of support is 80,469, and our resistance is 85,501 for Bitcoin. Then if you look at Ethereum has got a support at 1,929, which is this horizontal line of support, and it has got a resistance at 2,079.67, which is the 9-day exponential moving average. So my friends, that brings me to an end of this session. Let me quickly go and have a look at the chat section and see if there is anything out here. If there are any questions from anybody or any ticker requests, I can take that. Thanks Hot Dog for staying with me, and we miss INF today, but he must be preparing for his travels, and I'll catch up with you guys again tomorrow. Happy hunting and good night to Hot Dog in Australia. Bye for now.